I'm George Mitten, investment writer here at Nutmeg. I've sat down with Pacome and James to hear their latest update on the markets. Let's see what they've got to say. The Conservatives have won a majority in the UK's latest general election. Is this good news for investments?
Well, the markets have largely taken it as good news so far, and that's for a number of reasons. So the strength of the Conservative majority really gives the government an effective way of getting on and governing the country, and unlocks the policy logjam that we've seen in UK politics for some time. So the new government's agenda was already set out in the Queen's speech, and we think we'll see a new budget in the coming months. But the strength of the majority also reduces the amount that the Prime Minister is beholden to different factions, even within the Conservative policy, in terms of getting policies through Parliament and into law. So that reduction in uncertainty is very positive for the currency. It's also positive for smaller companies with a strong domestic bias. But also investors as a whole have really ignored the UK for a period of time, and going back in some surveys as far as 5 years being underweight equity investments in the UK from global investors. So we think we will see some global investors coming back to UK equity assets, even if it's just to reduce the extremes of those positions. Another thing that's good about the certainty is we now know what the direction of travel is. So we are heading towards a withdrawal agreement and into a trade negotiation with the EU. That gives businesses some more confidence about the UK economy, about the direction of travel. It means we'll likely see some return of business investment that has largely been on frozen since the 2016 referendum, and it gives some impetus to the economy. So we think it's largely positive news for financial markets.
As you mentioned, the next step is a trade deal with Europe. Can Boris do it?
Well, it's a good question. Well, first of all, the result of the election should really improve the efficiency of the negotiation. If you think recently, the Europeans were facing the difficulty to negotiate and agree a deal with the UK governments and UK negotiators just to see this deal rejected by the UK Parliament. So this has all changed with this new majority, and it will really add some amount of credibility to the UK negotiators when they can agree a deal or agree things with the Europeans and get it approved afterwards by the Parliament. However, not everything is going to be straightforward, and the UK is going to face incredibly tight deadline in the next few months. But the first one will be the 31st of January, where the Parliament will need to approve the new deal, the new Brexit deal. But this is likely to happen with this new majority. However, after that, the second one will be really mid-2020, where the government will need to do the trade negotiation with the Europeans. And from there, basically, three solutions are going to emerge. Or they agree on a deal, on this really tight deadline, or basically no deal is agreed, and the UK will crash out of the European Union at the end of 2020, or an extension can be requested, but Boris Johnson has said that he will not do it, but we will see. And in this case, they can have up to 2 years to continue the negotiation. So to answer your question back, yes, it is doable, but it's going to be incredibly tight, and it's likely to create some volatility for UK assets and for the pound.
From one trade deal to another, what's the latest on the US-China trade talks?
So it looks as if a US-China Phase 1 trade deal is done, and that's due to be signed in January. And both sides are very positive about that outcome. Both have been spinning it in the media as a very positive first step towards trade normalization. Now, the US, on its part, has cancelled the additional tariffs that were due to come in on the 15th of December, and they would have impacted consumer goods, so they really would have hurt the US consumer. And they've also reduced the amount of the tariff on some existing tariffs from 15% to 7.5%. So, one of the key concerns for the Chinese side was around the level of tariffs that are being imposed on their imports. So that's a real positive for them in terms of reaching some sort of normalization. On the Chinese side, they've also suspended some tariffs that were due to come in on the 15th of December. And they've also committed to some verifiable purchases of agricultural goods. There's a little bit of uncertainty and a little bit of nervousness around that because of the impact it may have on trading partners. But again, that seems to be in the deal and is a positive outcome for now. So all in all, a very positive first step towards a Phase 1 trade deal. And we'll really be hoping that both parties can keep up their momentum into the new year and we fastly progress towards a more advanced trade normalization.